the point of having perfect targets is to increase clarity in a trade, right? Or reduce confusion in a trade. We see something go up. We wonder why it hasn't hit our target. We're sitting in this. We're still in profits. And it takes an eternity. We entered at 200 and all of a sudden price is at 204 over here 2 weeks later. And then it moves up and then we complete our trade. And it's like, wow, look at all that time you just wasted. Alternatively, the better way to have targets is to identify what is current in the move, and the benefit that reducing confusion or increasing clarity is that when you've taken this sell here, you have the benefit of just seeing what can occur locally. So for example, we'd have a local trend very much like this, swing high to swing high. This is time that you saved, right? So if we actually just delete this circle because it's a little confusing to see both, this is time you saved where you could have been trading something else and not being stuck in this move. And what if Bitcoin fails and this pulls back and you are still in this and you actually took what could have been 6% profits and you forfeited it because you didn't identify your target properly, right? What could have happened if you looked at another trade in this point and made 5% and then came back into CMT to buy the perfect spot where it would break right here, and you could then buy this point here, therefore starting this whole cycle over of reducing risk by understanding where the perfect entry based on the cycle of the move is, right? Not understanding the ulterior cycle, which is just simply saying, oh, the ulterior cycle is this. We're breaking this pink line. We're going up here. Fine, that's an ulterior cycle. Within that cycle, there's going to be micro pieces that exist. There's going to be a scalp trade that exists here, a scalp exit that exists here, a re-entry here. Consider this like a series of scalp trades where you, in a move that was like this, it goes to target, it pulls back, it hits like this, it comes here, it goes like this, it goes like that, it comes here, it fails down, it comes back up to here, it goes like this, goes like that, this, that. Consider this a series of a novel of many scalps. You enter here, you exit here, cut out all of this noise here, you re-enter here, you exit here, you cut out all of this, right? Maybe not all of it. Maybe you see this trend right here, but you entered here and you exited here, making for a very quick trade, and you cut out all of this. And then maybe you had this trend like here, so you re-enter here and you sold here. And it's a series of very quick and easy scalps that not only has the duality to protect your account, but also shows you where you can get perfect entry instead of just taking this action of 1 right here and 2 all the way up here, right? Meanwhile, this trader made maybe 50%. The person who did this, like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and treated this as a series of scalps, that first person, that person who did number 1 and 2, they maybe made, I don't know, maybe 50% on this trade because it was a really great trade and it broke a crazy trend. And you went from 200 to 300 sats. Person 2 probably made 400 to 500% on this trade because they had treated this as a series of scalps by identifying the correct targets versus what was the relevant point that was breaking, by understanding the move from the start of it and taking perfect entries at every corner of this trade, and then having perfect exits on the other side every single time. Not only did they reduce all the risk of worrying about if this is going to fail, because this could have simply came up and targeted this like this and here, and it's looking good, and then all of a sudden it moves down, right? Falls off a cliff. This is very common. What happens is they have basically forfeited all the profits and the time necessary here to actually, or not necessary, but all the profits and the time invested in this trade, right? Time is our most valuable asset in day trading. I always try to stress this to people that time is your most valuable asset. You can always just go in the market and reach for money. Time is your most valuable asset. And that's what you're doing by exiting the proper target. You are preserving time and using your time better elsewhere, because this might just pull back and do this until you're out here on October 28th. And therefore you've given up 6 days because you were too stubborn to get out of the trade. And then 6 days later, it goes straight to here. So in a bubble scenario, this trade was great for the person in a very kind of shrouded or shielded way, October 22nd to October 31st, and you made 50%. Yeah, that's great. I mean, 50% in 1 week. Yeah, that's fantastic. But you also took all the risk associated with it. You forfeited all the time you could have been trading other markets. You reduced the amount of total profits by forfeiting the compounding effects of being able to constantly scalp this. It's something that I constantly see in people. A misidentification of targets becomes a misunderstanding of the cycle a move is in. quite simply, if we just break this back into a very basic manner, you break the green line, you target the green origin level. And now this coin is set up to have very much a reaction like this, because you can see that it has targeted its origin level. It does have the setup for the next origin level up here. So you could very much expect this first origin tested, break the blue line, the second origin is tested, which will create a new purple line, a new purple line like this, right? A new purple trend, and then you break that purple trend, and then very much you have the origin level for this purple trend set up. This is a kind of classic move setup in one of many ways that I constantly see. But it's showing it to you on the charts. So it's just a matter of identifying the right targets based on your technicals, right? Very much you have this cycle of the move showing you exactly what is happening in this move, and the target is going after. So to stress this point, the benefit of understanding the target is to reduce confusion, because now you have the ability to walk through this thing as if it was your child and it was taking its first steps, right? You break your trend, you come back, you sell, you can see exactly the trend it's going to create that you need to break in the future. So you come back and you wait for it to hit that trend before you re-enter, therefore reducing your position. You took 213 as a profit and you re-entered at maybe 204 or 205. And so it breaks up 204, 205 and hits 213 again. And so fine, you sell there a second time because you've justified the reason to sell this second time. And then it comes back and it holds some range inside of here, some hold level inside of here. And you're saying, wow, this thing's going to break up. So then you sold at 214, you got back in at 210, you compounded your gains by another 2%. And then it breaks up to its next level and you sold instantly and it comes right back down and decides to hold some, valley from back here. And you've identified that. So you bought here and you saw maybe a little inverse valley in here like this. So then you sold this inverse valley right here for your first sell, creating the first trend, right? So then you already sold right here, making another, you sold here first and then you rebought down here and sold here to create the trend. Then you ended up breaking trend again. And you're using trend all along the way to reduce risk every single time. So you have both sides of the sword here. You have both benefits. You have, not only are you taking maximum profits, but you're reducing the risk because you're only entering upon succession of trends and you're using those trends to measure risk going forward. So you're basically getting to remeasure risk every step of the way while taking maximum profits and getting better entries all along the way. So then maybe you go up here, you see failure because it hits some inverse level and then it pulls back, hits that inverse level again. And you say, wow, we hit this inverse 2 times. I'm out of this trade. Forget it. I'm done. And you've made the maximum amount of profits. And then this thing pulls right back to trend before creating this purple trend like this and then breaking this out in the future somewhere before it can reach this target. So you've kind of taken the benefits of all scenarios when you identify targets correctly. Again, now it kind of is probably making sense as to why understanding trend reduces risk and gives you the best entries possible. Understanding targets reduces confusion and increases clarity, right? You get the benefits of both worlds, right? If one side of this, and this is kind of why I teach it in the way of let's maximize our entries first and understand how to get perfect entries, right? Let's first start and lay the foundation with perfect entries. So this is very much what you start with which is perfect entries. Okay, you know what? We're actually going to delete that and just erase all the lines because it's a little quicker this way. So then we're going to go back and say, we perfect entries as a first requiem to understanding how to become best traders we can be. And perfecting entries is just the reduction of risk against, it's not just the reduction of risk against trend. Obviously, there's a lot more that goes into that, but using trend as a tool of measurement in a very advanced way will show you perfect entries, which gives you, one effect. You master trends and you have perfect entries, therefore you protect capital. So very much perfect entries gives you one huge benefit, which is protecting account capital, right? Protecting capital. This is very important. The starting point and the first step to enter any trade is to protect your capital in that trade and perfect your entry, right? So perfecting entry allows you to protect capital. So there's a one-to-one huge benefit. On the other side of this, as you get to be a more advanced trader, you have perfect targets. Perfect targets has a wide range of benefits to it. It increases clarity, right? Increases clarity on your charts. It maximizes profits on your charts like this. So it increases clarity, it maximizes profit, it reduces confusion. It increases on the other side because all you're doing is you're entering a microcycle of perfecting entry. So in a third degree, it's protecting and building capital as well. So protecting, and let's make this capital P, keep it all synonymous here. It's protecting capital as well on a micro sense. So perfecting targets is very tough. It's much harder than perfecting entries. Perfecting entries, and the reason I teach it in this order is because perfecting entries is an easy thing. Perfecting targets is a mastering of your technicals, right? So there is a large range of things you need to know to understand perfect targets. But as a second step to becoming the perfect trader, if you were to put this, like I said at the beginning, in a balloon, and that balloon had two hemispheres, the first half of being a perfect trader is this side, the second half is being this side. Now, there's lots of things in between or inside of that balloon that you have to know as well. And there's always subject to human error, mental analysis. And I actually strongly feel that mental analysis is the cusp to what separates the people trying to be pros and the people who actually are professional traders is a great degree of mental analysis. But from a technical analysis standpoint, this completes the sphere: perfect targets and perfect entries, or perfect entries first, followed by perfect targets. But to achieve these things, there's, 50 degrees or 5 degrees in each different direction of things that we have to understand in order to get to this point. So perfecting targets is, the first step to, again, being technically in a technical analysis standpoint, perfecting targets is very much the first step in the final hemisphere of day trading, right? It's the first step in completing a perfect trade. Because if you could do this every time, you complete this properly and this properly in the cycles that we described, you've entered and exited a trade in very much a perfect sense. But it's not this easy, because as we know, there are 50 things you have to know about this and 30 things you have to know about this, right? It's heavier weighted to perfect targets. Perfect targets is much harder than perfect entries, but at the same time, they are both tough in their own respect. Both require a great amount of knowledge, a very deep insight to the technicals. But this is very much the complete cycle, as it should be, right? If you were a robot, you could recreate a perfect entry, a perfect target every single time without human error or the mind getting in the way. You could recreate this every single time, all day long, every day, and therefore just end up retiring in a few years. So, perfect targets is not easy, but it's definitely part of the cycle of completing a perfect trade. You should wait till it's setting up this trend break again, the local trend break on its move. And I would be observing two trends. I would be, not that tool. I would be looking at this right here, this trend right here to break, and also this here. So I'd probably draw both and see how it reacts. Just like you do with these trends over here, except this is a microcycle, right? You still need to have somewhere this holds through its trend, right? Like wherever it's going to end up holding, you have to have somewhere it holds through trend, has a little pull up, hits a valley, recreates this to this point here, and then ladders up against that, right? And then has like this pullback here like this, and then ladders up to that to a bigger level where it can maybe confirm this and move up like that. So it still has to complete this local. This is a local cycle against this global event. If you were to rewind this to here, you were in the local cycle, right? So you're always in a local cycle. It's just about understanding where that local cycle exists. Every time you make a move, you're recreating a local cycle. So if you move up like this, like we did today, this is going to create its own local cycle. So this local cycle has to break so that it can attack this global cycle right here that we are in right now. But this global cycle is actually just a local cycle to this global cycle, right? You see what I mean? So you're always creating, or you can call this a super local if you want. You can do a fourth degree, but whatever the amount of degrees doesn't matter. The knowledge is still the same. But if it made you understand it better, you could use a fourth degree, which would be local, super local, global, legacy, right? You could call it super local if it helped you understand the fourth degree of this. But as it's creating this move up to attack the local level, it creates its own local cycle to break this. Just like this green cycle is trying to use this to break the larger blue cycle out here, right? We can go to BAT. BAT has been moving up today. You'll see it on BAT. It'll probably have, a cycle within a cycle within a cycle. So, it has this trend break right here from back when. I wish I would have gone to this trade. I wasn't paying attention, but of course I have it charted, but that's okay. And then it very much has its own local cycle right here. It has to break this. which ends up breaking out here, which ends up breaking here, and then the move is done because this broke the cycle of the move up. Just like it would have had its own cycle right here. In order to move up again, it would have had to break this part of the move right here, which ends up fraying to right here. So it would have had to break this trend off of whatever it's holding in order to move past this. Oops, no, we don't want that. In order to move past this point of that cycle, it has to hold whatever move through the trend, right? Otherwise, it would just fail down and the move would be over. So whatever this move is in here, I'm not sure exactly where the move exists. Maybe it's here, maybe it's there. I'm not sure, but it would have to hit its hold level, hold it through its cycle. What's something that has moved down? We can take a look at where a cycle failed. Ethereum very much would have broken its local. Okay, so if you rewind Ethereum to back here, back to come on, right here, and it's continuing to ladder up, it would have very much had its own cycle to have succession. So you have trend to trend like this, and it would have had to break this, and when it breaks this, it has a move up right there, you see. So that would have created this right here. I'm assuming this is going to be the 4 hours, so I'm going to use this. So it would have to now break this trend in order to have its move up, right? So it would have to kind of hold something inside of here. As a very last piece, it would have to like hold this. But I suppose it would try to hold this first. So it tries to hold this first against that trend to complete its local cycle. And you can see right there, it fails its first level, it hits its second level. It hasn't quite legged the move yet, but you can see what it needs to break. And then it legs the move, and then it will probably end up just having a little pull up here. So you can see where it's failing because it can't break out of its trend, right? You can see it. And so it does it right there. So then it creates a next piece it would have to break up and out of. So it'd have to break up and out of this next in order to have succession in the move. And it just fails down because it can't break its trend, right? So it's very much like we see with any trend. Imagine these were 1 week candles. It doesn't matter if they're 15-minute candles or 1 week candles. The candles, they're all representative of the same science. It doesn't matter. The time frame is irrelevant, right? So if you're dissecting the top of Ethereum here and you're saying like, oh, look, we just had this pullback. We broke trend and trend fell short, and then we hit that again and it fell short again. Like these are the, versus BAT, which we looked at BAT, and BAT broke its trend, pulled up, right? It would have created this right here, this to this right here. And when it breaks that and it attacks the leg of its move right here, it's going to break up, right? So you can very much see how this, like call these 1 week candles. It's the same goddamn thing. It doesn't matter, right? It's like hits here, holds a level, moves up, creates a new trend, holds a higher range off that, breaks over trend, legs the move, right? And then this will have its own cycle right here. So this would just, continuously repeat over and over and over. So then you'd have something very much like this against here. And so when you break that, you have the move here. So then you would have this trend right here, which is your target, wherever this move frays out. So I think you probably have to use a larger time frame for this one. Right here to here. Yep, that's perfect. Oh, magnet tool's not on. That's why it's not working. Right here to here. So when it starts to break over top of this, and then so you'd be here, and then you'd be at this candle here, right? So this is the cycle that it holds its level, moves up against, go to the 4 hour here, goes here, and then here. So once it breaks over top of this cycle, that its local cycle, you'll see it'll impulse up again, right? So you can see very much where it has its move up there because it broke it's breaking its trend, right? Like perfect entry against trend. Look at, pretend these are 1 week candles, and this is, how long of distribution this has been in since, like May of 2018, and it's been sitting here trying to break over an origin level right here for how long, right? Like look at this origin level right here. This was created how many months ago? This was created like how many times ago? And you very much break your trend, hit your origin level, back confirm the origin level, and then take an impulse up, right? But pretend these are weekly levels, and this is like 2017, right? This is the same. It's all the same thing.